David Levy is a nationally recognized economist and economic forecaster. With over 30 years of professional forecasting experience, David is a sought-after expert, respected for his accuracy and his unique approach to assessing economic conditions.
David Levy of the Jerome Levy Forecasting Center.
We want to debate, is the worst over for the economy? Let's bring in David Levy.
David Levy made 600% on betting that interest rates were going down.
In March of 2007, David forecast U.S. housing prices would drop 30 to 50%. And by this past April, the S&P Case-Shiller Home Price Index had proved him correct.
If we look back, particularly the last quarter century, is every time we had an expansion, there was a greater element of bubble behind it. Bubbles creating wealth that led to excess spending, bubbles leading to excess investment in real estate and business capacity. This process of shrinkage in balance sheets, which is going to unevenly go on for a number of years, is really holding us back. It's exactly what happened in Japan, except I think Japan took way too long to clean up their problems and slowed the process down unnecessarily. I do think there's one good asset, which is long-term treasuries. We stretch the capacity to do that, to carry more debt, to carry higher asset values relative to output by lowering interest rates, by creating looser and looser finance. We came to the end of the rope. We're now in a long period of bringing balance sheets back in line. We're in an era of overcapacity, weak profit margins, financial stress. It's going to take years to get back down even to 6.5%. So that, and labor costs are the dominant long-term influence on inflation. That's the number one reason not to be worried about inflation.
He is one of few economists who have successfully forecasted the financial meltdowns that accompanied each of the last three recessions, including the financial collapse of 2007 to 2009. He is among an even smaller group of forecasters who successfully profited on investments based on those forecasts. Levy is chairman of the Jerome Levy Forecasting Center, a provider of macroeconomic research and consulting services. His clients range from corporate firms to major hedge funds. In addition to speaking before investment committees of major companies, Levy has spoken over the course of his career to numerous professional, academic, and public policy conferences, and at major colleges and universities.
Just looking at the profit sources, it was clear the amount of profits that had to be coming from inventory investment, largely based on exports and capital development that was based on exports, even though they had a lot of infrastructure also, and the trade surplus. You put this all together, it was an enormous share of their profits. There was no way the world economy could fall off without it being, an enormous problem for China.
In addition to TV appearances, Levy is frequently interviewed by major media outlets. Levy's unique approach to macroeconomics, the profits perspective, provides audience with a different window on the economy, one that goes beyond real GDP and abstract models. This framework is highly valued by clients in an era when conventional macroeconomic models have largely failed. The framework was developed by David's grandfather, Jerome Levy, in 1914, and honed by his father, S.J. Levy, who would start the economic forecasting business in 1949. The perspective was used heavily by Leon Levy, co-founder of Oppenheimer & Company, and by the late revered economist Hyman Minsky. David Levy co-authors the Levy Forecast, the nation's oldest newsletter devoted exclusively to forecasting and analyzing economic conditions. Levy was appointed by President Clinton for a commission to study budgeting and has consulted government officials on many occasions. Over the years, Levy's maverick forecasts and unique approach have led to extraordinary gains in financial markets for himself and for clients.